So price does not matter because silver is going to go through a failure to deliver. And when that happens, you either own silver and have it or you don't. You're either in or you're out. And if you're out, you'll never be able to get back in. You'll never be able to get in. There won't be physical metal for you.
And do you have any recommendations, just in general, a gold to silver ratio for an optimal situation for a person? I know that can be very personal, so you may not have an answer to that. But do you have any thoughts along those lines? I know a lot of people will ask me, how much percentage should I have in this or in that?
Yeah, as long as the ratios come down, but still at 55, 56 to 1, I've said that people should be at least 70-30 in favor of silver with an eye toward swapping silver at a later date for gold. And I told people for the last 5+ years that if you want to be 100% silver, I don't have a problem with that. But when all is said and done, you want to have more gold than silver. I mean, optimally, you want 60-70% plus in gold versus silver during normal times, but we've not had normal times or a normal gold to silver ratio, probably for 30 years. So silver has been the target. Silver is where I believe the failure to deliver will happen. And the bottom line is once it fails to deliver, you're either in or you're out. You're not going to be able to alter your position. You won't be able to buy gold. You won't be able to buy silver. If you don't have it, you're locked out.
This is not financial advice. It's us talking about strategies and thoughts around what we're doing. Everything else that's going on in the macro right now with what's recently happened with Venezuela. Do you see that affecting the timing of things? Do you see that giving us either more of a runway before potentially the great taking? Do you think it's accelerating?
Well, it certainly heats up geopolitics. Uh, and if you go back to what was it, October of 2022, I believe, was when Biden sequestered, confiscated, whatever you want to call it, 300 billion of Russian Treasury reserves, U.S. Treasury reserves that they were holding. That was outright theft. And from that day forward, gold started moving higher because nation after nation looked at that and they said, if they could do this to Russia, they could certainly do it to us. So that was the beginning of this move of de-dollarization, if you will. Going in and basically just taking over Venezuela, it's not a good look. I understand what they're doing, and it will. They're trying to get. What they're trying to do is they're trying to get assets that are not encumbered that they can use as collateral, and obviously the oil and the gold and the silver, whatever other commodities that they can take from Venezuela. But it's not a good look, and it certainly accelerates. If we're going to go to war, it certainly accelerates that happening.
Recently, we've seen silver do over 155% return, or gain, I should say, this last year. And a lot of people were watching gold as well, and a lot are invested in gold. And then it seemed like platinum came out of nowhere. As Mr. Gold, what's your opinion on platinum? Is platinum a metal worth getting involved in? Is it a distraction? Is it something that's going to be, more heavily affected by, geopolitics and what's coming up? Or is it something that could be a good addition to a portfolio?
Yeah, it can be an addition, but understand it's basically an industrial metal. And if you get to the point where uh, the real economy is upside down and basically, I don't want to say closed, but severely hampered, the demand for platinum is going to drop. Platinum nor palladium are considered precious metals. They're not considered money. Gold and silver are money. The reason you want gold and silver is because they are monies that cannot default. And the system is not tenable. And we will go through an insolvency default. The system itself is in the process of defaulting. So you want your capital outside of that system and in something that cannot default. And that something should be money, gold and silver.
Now, as we look at the precious metals, gold and silver, I want to say it was about a month ago, I heard on another channel that you were talking about getting as much constitutional or junk silver as a person could. But what's your take on things like 100-ounce bars, constitutional silver, silver eagles, and just more generic silver rounds and bars in general when it comes to stacking the physical? Do you have any preferences, thoughts, cautions, or suggestions?
Uh, Let me go at it from this angle. In a system breakdown where you've got financial markets either uh, having a problem opening, functioning, or not even open, with a societal breakdown, and that's where this is going to head to. With a societal breakdown, what good is a 100-ounce bar? I mean, what are you going to trade it for? How do you trade it? You can't. Um, the problem I see with bars of any size, 1 ounce, 10 ounce, 100 ounce, the problem I see with generic rounds is that how are you going to prove it's real silver? In a system breakdown, how do you authenticate that? In a The way to authenticate it is junk silver. Everybody knows what a dime, quarter, or half dollar looks like. As long as the date is 1964 or earlier, that authenticates that it has 90% silver. You could drop a dime or a quarter on the counter and it's going to sound way different than a current dime or quarter. That authenticates it. It's U.S. Mint lineage, meaning it was created by the U.S. Mint. They have to be scruffy, so they cannot be counterfeited. When I say they have to be scruffy, these were in people's pockets for, 10, 20, 30, 50 years. So they've got to be scratched. They've got to be dirty. If you see a clean dime or a clean quarter or half dollar, it very well could be it could be a counterfeit. So it can't be counterfeited. It's readily recognizable, and it's the smallest unit. 14 dimes equals 1 ounce. So that gives you 14 transactions versus one with a 1 ounce bar, an eagle, a maple, a generic round, a 100-ounce bar, whatever. Um, if you're trading with a farmer for eggs, you give them a dime for a dozen eggs. But if you don't have any dimes, you only got 1 ounce pieces. You get your dozen eggs or 2 dozen eggs. Now you're issuing credit to the farmer. He owes you eggs. And I would just say, like Ben Franklin, neither a lender nor borrower be. So, I mean, it's the best form for an American to own, and it happens to be the cheapest form currently. I mean, it's cheaper than any bars, any rounds. It is the cheapest form. And the reason it's cheap right now is because of the run up in price. You had people that bought back in the 70s and 80s, and junk was really the only way for Americans to buy silver. A lot of that's coming out of the woodwork. People saying, "Oh, I finally got my money back," or "I finally made a profit." Lots and lots of junk silver this past year was sold. Dealers backed away from it. I mean, if they're bidding $5 or $6 under spot, they're sending it to a refiner and they're pocketing that $5 or $6. But it creates an opportunity for you because you can buy the best form of silver cheaper than any other form of silver. You get the best for the least.
So, Bill, looking at all of the things that are going on out there, do you have any ideas on some timing? How much time do you think we have to continue to build our stacks before we might hit that point of time where we're just not able to acquire anymore?
Who knows? I mean, I don't have the answer to that. Nobody has the answer to that. It could be by the time you post this interview. Who knows? All I know is we're in a structural deficit. It looks like there's going to be a failure to deliver on paper markets. And when that happens, it's game over. If anybody gives you time and or price, they're full of shit because nobody knows. And just understand that when this thing melts, when the whole system melts down, all the leverage is going to break. I mean, stock markets, bond markets, real estate markets, they're all held up with leverage. But guess what? That same leverage was used to suppress the price of gold and silver. So the way to close the gold and silver positions for these institutions, they got to buy.